If you're within a few years of claiming Social Security or you're already receiving it, there's a question about how your monthly benefit was calculated that most people have never had answered clearly. Whether you're getting the right amount right now depends on a number in your earnings history that most people have genuinely never looked at. You've probably heard that Social Security uses your 35 highest earning years. You may have taken that to mean that as long as you worked long enough, gaps in old records and errors in specific years can't really hurt you. That assumption is partly right, but only under a specific condition. Whether that condition applies to you depends on your actual covered year count on your Social Security record, not years you worked. Years the Social Security Administration has credited you with covered earnings. Those two numbers are often different. If you've never looked at your record, you don't know which situation you're in. That's what this video is about. And by the end, you'll know exactly where you stand. We have 5 things to cover today. And we're building toward the one piece of this that most videos never explain, the precise condition that determines whether any error or gap in your record is actually costing you money. We're going to earn our way there. Quick context first. This video is made for adults at or approaching retirement age who want to understand how their Social Security benefit is calculated and how to verify whether the underlying earnings record is accurate. The goal is to walk through how the 35-year rule works, when errors and gaps actually affect a monthly benefit, and what the correction process looks like in practice. Everything here comes from publicly available official information, the Social Security Administration, the IRS, and reporting from Kiplinger, and I'll name each source as we go. This is educational content only. It is not personalized financial, tax, or legal advice. And nothing here is a promise that you will receive any specific dollar amount. Before making any major decision, talk to a licensed professional who knows your situation. This channel covers how the rules actually work, with sources, without the alarm and promise framing that wastes your time. If that's useful to you, subscribe and hit the bell. And a quick question, when did you last log in to check your Social Security earnings record? Not the benefit estimate, the actual earnings history. Year by year? Most people have never done it. Let us know in the comments. We have 5 items. Starting with number 5. Number 5 is what to do if you find something in your earnings record that doesn't match your actual history. The form is called the Request for Correction of Earnings Record Form SSA 7008. You can download it from the official Social Security website. Request the correction online through your My Social Security account, or handle it in person at a local Social Security office. The Social Security Administration's official guidance states the standard deadline plainly. You ordinarily have 3 years, 3 months, and 15 days from the end of the taxable year in which your wages were paid. But the same guidance lists 4 exceptions that cover most real discrepancies. After that deadline, you can still correct records that match tax returns filed with the IRS, fix errors caused by employer omissions from processed reports, address errors visible in SSA's own processed records, and include wages an employer reported as paid to you that never made it into your file. Pause this and write those 4 down. They come directly from the Social Security Administration's published guidance and cover more ground than most people realize. Processing takes 10 to 90 days. Per Kiplinger's reporting on this process. Keep copies of everything. Number 3. There are 4 categories of workers with a historically higher rate of earnings discrepancies. The first is anyone who worked for a small business in the 1970s, 80s, or early 90s. When payroll reporting was handled on paper, smaller employers had less oversight, and manual submissions had higher error rates. The second is self-employed workers, freelancers, and contractors at any point in their careers. If self-employment income was not reported to the IRS with the correct self-employment tax schedule, the Social Security Administration never received credit, and correcting it requires amending the original tax return first. The third is anyone who changed their name without updating their Social Security records. When a wage statement goes in under a name that doesn't match SSA's file, those earnings can end up in a suspended file, assigned to no one. The fourth category grew significantly in 2025 public sector workers previously subject to the windfall elimination provision, or the government pension offset. The Social Security Fairness Act of 2025 repealed both provisions. If you worked in a state or local government role that didn't cover Social Security, the rules governing your benefit have changed. Reviewing your earnings record now is a practical step to confirm the new calculation is correct. The earnings record correction process itself was not changed by that law. If any of those four categories matched your work history, leave a note in the comments. The question that comment sections on these videos argue about without ever resolving if Social Security uses your 35 best years. Why would a gap hurt you if you worked more than 35 years? That answer is in number 2. We are almost there. Number 1 is where to find the document that shows you all of this. Your Social Security statement contains your complete earnings history every year of covered income on file. Going back to your first job, it is free. You access it through your My Social Security account on the official Social Security website. If you haven't set one up, it takes approximately 5 to 10 minutes. Once you're logged in, the earnings history is the section that matters, a list organized by year, showing the covered wages the Social Security Administration has on record. Count the years where the covered earnings figure is greater than 0. That is your covered year count. Write it down. That number determines whether the 35-year rule is fully protecting you. Then compare the amounts in your highest earning years against any records you have W-2 forms, old tax returns, pay stubs. Look for years showing significantly less than what you actually earned from covered employment. Years showing 0 when you know you were working a covered job. And years that simply look wrong. Number 4 is the documentation reality. Who has W-2 forms from 1985? For most people, nobody. Strong evidence for a correction includes W-2 forms, federal tax returns, and pay stubs from the disputed years. But 2 official options exist when you don't. The Social Security Administration maintains copies of W-2 forms going back to 1978 per SSA's own published guidance. You can request free copies when your purpose is Social Security related. Write that down. It is a confirmed official resource most people have never heard of. The IRS, by contrast, provides wage transcripts only up to 10 years back. For older records, SSA's own archive reaches significantly further. Corrections of very old earnings from employers that no longer exist, where no tax return was ever filed, face a harder evidentiary path. Use the process when evidence is available. Here is a story that illustrates what this looks like. This is an illustrative composite drawn from circumstances that benefit specialists and SSA advisors have described across multiple case types, not a single verified individual. Carol is 63 and worked as a home healthcare aide for most of her career. With 7 years away from the formal workforce when her children were young, when she logged into her My Social Security account, she counted 31 covered years, not 35. 4 years of part-time work in her early 20s at a small business showed no earnings. She requested free W-2 copies from the Social Security Administration for 2 of those years, confirmed the covered wages, and filed the correction form with those copies attached. Her benefit estimate increased modestly, not dramatically, and her record now accurately reflects what she earned. She did not need 40-year-old paper documents. The SSA's own W-2 archive handled 2 of the 4 years. Number 2. This is what everything else has been building toward. Social Security does use your 35 highest earning years. Your benefit is based on what the Social Security Administration calls your average indexed monthly earnings. SSA takes every year of covered earnings on your record, adjusts each year for wage inflation through a process called indexing, then identifies your 35 highest years after that adjustment. Those 35 years are totaled and divided by 420 months to produce your average. Then run through a progressive benefit formula to calculate your primary insurance amount, what you'd receive at full retirement age. When do zeros and errors actually hurt you? If you have 35 or more covered years on your Social Security record, zeros in years outside your top 35 do not affect your average or your benefit. The Social Security Administration drops them. If you genuinely have 35 or more covered years, the rule does protect you from low earning or empty years at the bottom of your history. But two situations cause a problem even then. First, an error in any year that ranks among your personal top 35 covered earning years, meaning an employer underreported that year's wages, reduces your average because it pulls down one of the 35 figures that go into the calculation. For a typical mid-career earner, analysis using the Social Security Administration's benefit formula shows 1 0 year in a 34-year work history reduces the monthly benefit by approximately $46, an illustrative figure at average wages. Your actual impact varies based on your earnings history and which bracket of the benefit formula your average falls into. Second, many people who believe they have 35 covered years actually have fewer, because not all employment is covered by Social Security. Some state and local government jobs, certain nonprofit positions, and some federal roles historically did not participate in the system. Those years appear in your memory as years you worked, but they are not on your Social Security earnings record. This is why the covered year count is the first number to check on your statement. Under 35 covered years means every uncredited year affects your average. 35 or more means you're protected from the bottom, but errors in your top 35 earning years still matter and are worth checking. That is the complete, sourced answer to the question the comment sections never resolve. Has anyone here already gone through the correction form process? Tell us in the comments how long it took. It helps everyone watching know what to expect. Quick recap. Descending. Number 5, the request for correction of earnings record. Available online, by mail, or in person. Standard 3-year window with 4 exceptions, 10 to 90 days to process. Number 4, SSA has free W-2 copies going back to 1978 for Social Security purposes. The IRS covers only the last 10 years. Number 3, elevated odds if you were self-employed. Worked for a small business in the manual payroll era. Changed your name without updating SSA. Or worked in a role with non-covered employment. Number 2, covered year count under 35 means every uncredited year pulls down your average. 35 or more means you're protected from the bottom. But top earning year errors still matter. Number 1, log in. Find the earnings history. Count the covered years. Compare your highest earning years. 3, log into your My Social Security account on the official Social Security website and count your covered years. That number alone tells you which situation you're in. 10 minutes to create an account if you don't have one. Not checking, this is the equivalent of never looking at your paycheck. It is your record of everything you paid into this system. 2, if you find a year that looks wrong and you have documentation, a W-2, an old tax return, a pay stub, write down the year and the discrepancy. If you don't have records going back that far, check whether the Social Security Administration's free W-2 archive covers those years before assuming a correction isn't possible. 1, before any major benefit decision, when to claim. Whether to pursue a correction, speak with a licensed financial planner, or benefits counselor who has access to your full earnings history. The Social Security Administration's official tools give you the information. A professional who knows your situation gives you the judgment that's specific to you. If you have a spouse, sibling, or close friend within 5 years of claiming Social Security who has never checked their covered year count, share this video with them directly. That conversation is worth having before they file, not after. One topic this video didn't cover, and several comments have raised it, is what happens when you're still working and wondering whether extra years are improving your benefit. The answer depends on whether those years are replacing lower earning years in your personal top 35. If you want us to walk through that calculation, what working past full retirement age does or doesn't add, let us know in the comments. And if anything in number 3 matched your work history, go back and watch that section alongside your statement open. That is where the practical work starts.